Good morning, everyone, and welcome to Friday morning. It's Stephen Whiteside here from the uptrend.com. Well, the president hasn't done anything to upset the market this morning after hitting the self destruct button the other day. It's now other countries that are reacting to what happened. Now, of course, Americans are going to have to deal with the fact that the president just issued the biggest tax hike in U.S. history. But it's the rest of the world that is now reacting to what the president did the other day. So the United States is, doing as well as Tesla is at the moment, as it has no friends or allies anymore. And you'll notice that the president didn't put tariffs on Russia the other day. So that is probably the U.S.'s only friend and ally at the moment. Now, a lot of U.S. companies are global brands, and yeah, the president wants to do stuff within the U.S., but there's U.S. companies that are known around the world, and they're so easy to spot. I mean, if you go to any capital city around the world and you walk down the street, you're going to see Starbucks, you're going to see McDonald's, just to name two companies. But these companies have spent billions of dollars trying to open up markets around the world, and the president just killed all of those opportunities. It's just really easy to spot U.S. companies. It's easy to boycott them. Now, it's harder to boycott, for example, Canadian companies. You look at this product here, Budweiser. I know it's American, and so I'm not going to buy it if I'm boycotting U.S. products. It says brewed and canned in the U.S. So is that a U.S. product? Well, the can is made with aluminum from Quebec. The carton is made with paper products from British Columbia. You've got the yeast and malt that comes from Alberta. And it's harder for Americans to see, what are foreign products because there's a lot of foreign stuff goes into making a simple thing like beer. And so you've got the external reaction to what Trump did the other day, and then, of course, the internal ramifications to what he did, which is essentially putting the biggest tax hike in U.S. history. Now, this image was taken a little while ago, and stock index futures have continued to move lower. I currently have the Dow trading down 1,500 points. So this morning's going to look a lot like yesterday, with the VIX up over 15% this morning, and the small cap stocks leading the market lower. Of course, when small cap stocks are selling off, we call that the risk off trade, and that's certainly what's happening now. Now, before the market opens, we've got some payroll numbers coming out, and then later in the morning, Chairman Powell is going to speak, and of course, the market is going to be glued to what he says on Friday. Now, on Fridays, I like to manually print off some weekly charts just to see where we are, and of course, this week is not a good week as we make lower lows. No, nothing surprising here. The Russell 2000 was, of course, the canary in the coal mine. It generated a weekly sell signal 15 weeks ago. It peaked back in November. And here we are. We're now trading back at levels we haven't seen since the start of 2024. The S&P 500 is down 3.3% this week. The NASDAQ 100 is down 3.94%, while the TSX is holding up much better, down 1.71% so far for the week. Of course, these numbers should, be lower by the end of Friday if the market holds its losses going into the close. Now, semiconductors using the SOX index is down over 9% this week, and it is back at levels we haven't seen since the very start of 2024. So that is the chips sector. Now, a lot of volatility in crude oil yesterday. It is down again in the pre-market. So crude oil getting creamed again on Friday morning. Was down. It's down $2.41 on the week. It's going to be down much more than that by the end of Friday. Now, gold's still holding up. It's up $7.40 on the week after making a new high, running up to the $3,200 level and pulling back. Now, the VIX moved up nicely yesterday. It's going to be up again this morning. So yesterday it was up 39% and change. It's going to be up again this morning. And of course, if you're long the ETFs, you're doing well. So congratulations. And, take some money off the table on Friday. Just lock in some profits before the end of the day. You do not have to completely liquidate a position. Now, the price of gold is still holding up fairly well, as I mentioned, and on the week, it is up on the week. Now, gold stocks that is a different story. They're still holding up, but you've got to remember that they're stocks and not the price of gold. So the TSX 60 rolled over yesterday. Within the TSX 60, there are some gold stocks. There's three: Agnico Eagle, Barrick, and Kinross, which all had very volatile days on Thursday. Now, if people aggressively sell off the TSX 60, these stocks are included in that index, so they're going to get sold off as well. And of course, those three stocks are part of the TSX Global Gold Index. And so once you start automatically selling off stocks, even though the price of gold is still holding up fairly well, your stocks can go down sharply. So I always, remind people that you don't own gold. You own a gold mining stock, and the gold mining stocks don't usually have a lot of gold around. As soon as they get it, they sell it to pay for their mining operations. So they're not a storage mechanism of gold. They are a producing mechanism of gold. So just remember that if the market goes down sharply, your gold stocks are going with them, and you've got to take the sell signals as they come up and not hope that they will continue to rise with the price of gold. Now, the major indices rolled over yesterday, and on yesterday morning, I noted that we got quite a few buy signals based on Wednesday's trading action. And of course, what you saw in the pre-market on Thursday morning was a good reason not to take any buy signal from Wednesday's trading action. So the TSX is holding up much better than the major U.S. indices, which are all currently ranked as zero. So everything is very oversold on a short-term basis and a long-term basis at the moment. That does certainly not guarantee any sort of turnaround right now. We're not seeing any upward momentum whatsoever. The worst performing sector that we follow on Thursday was oil and gas equipment makers. Then we had the semiconductors down on the day, 11.9%. We had a big drop for oil and gas explorers, trading right back down to the lows from early March. Then we saw a nice move down for the regional banks. The regional banks were down over 10% on Thursday. We had transports down over 10%, and then we had the banking sector itself. So the major banks down 9.16%. The first losing sector in the Canadian market was Infotech, and it was down 9% on the day, being led lower by Shopify. Shopify is down 19.63% on the day. So we're already on a sell signal. If you're short Shopify, congratulations. If you're short Celestica, if you're short Lightspeed, or if you're short BlackBerry, all of those trades worked quite nicely on Thursday. No reason to do anything about them on Friday. Last up, the leveraged ETFs, of course. If you've ever done a tutorial with me, I try to make sure you've got these in your portfolio, so when the market's falling, you can make money. And of course, the 2X ETF on the S&P 500 was up 9.71%. The 3X traded in New York was up over 16% on Thursday. So congratulations, anyone long the bear ETFs at the moment. Okay, folks, that is all for this morning's presentation. Just a couple of things to note. We've got NVIDIA currently trading below $100, so it's breaking the $100 level in the pre-market. And we've got crude oil down another $4.50 in the pre-market. Crude oil is crashing because when you go into a recession, you don't need as much crude oil. So, I know a lot of people were screaming, drill, baby, drill, but that's not going to happen, because if the price of crude oil keeps falling, it's falling below the break-even point for a lot of companies in the business. So they're not going to want to put any new drills in the ground if they can't make any money. So that is the end of that conversation for the time being. Enjoy the rest of your day. If you're a member, I'll be back on Sunday morning. If you're not a member, next time you'll hear my voice is on Monday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.